All right, so should you buy individual stocks?
Right.
So we're going to try to break down all this information, see if
Oh,
we can help you kind of figure that out.
sounds good.
So,
Yeah,
yeah.
it's funny, right? Everyone hears those stories,
Right.
people striking it rich with Apple or Amazon.
Oh, yeah.
And it's so tempting to think like,
Totally.
maybe I could pick the next big winner too.
Yeah, but all the research that you sent paints a very different picture.
Yeah.
Imagine you're putting together a basketball team,
Okay.
and only 1 out of every 10 players even makes it to the pros.
Right.
That's kind of what stock picking is like.
It's true.
Yeah.
Most companies actually destroy value instead of creating it.
Wow.
Take the S&P 500,
Okay.
which is supposed to be the top 500 companies in the U.S.
Right. You would think those would be pretty safe bets.
You would assume so.
Yep.
But one study followed the S&P 500 for over 40 years
Okay.
and found that only 15% of the companies on the list in 1957
Wow.
were still there in 1998 and had actually beaten the market average.
So basically, if you were just picking stocks randomly,
Yeah,
you'd only have a 15% chance of hitting on a long-term winner.
exactly. And it's not just the S&P 500.
Okay.
When you look at the entire U.S. stock market going back to 1926, over 80% of companies listed just vanished, poof, gone.
Wow.
They didn't just underperform, they completely disappeared.
Okay, that's making me rethink this whole stock picking thing.
Yeah.
What about going for those big established companies?
Sure.
Surely those are safe.
That's where it gets even more interesting.
Okay.
There's this book, Built to Last,
Uh-huh.
which studied all these companies that were supposedly visionary
Right.
and had already beaten the market by a huge margin.
So the superstars of the business world.
Exactly.
Okay.
But get this, just 5 years after the book came out, more than half of those visionary companies were actually doing worse than the overall S&P 500.
Hold on, you're telling me that companies everyone thought were unstoppable could still flop?
It happens all the time.
Which companies are we even talking about?
Big names you definitely recognize. Nokia, Cisco, Ericsson.
Wow. Yeah.
These were the darlings of the tech world at one point.
Right.
Everyone was buying their stock, but then things shifted.
Yeah.
It just goes to show that past performance doesn't guarantee future success.
It's like trying to catch lightning in a bottle twice.
Right.
Even if you pick a company with potential, the market can change, and suddenly your sure thing isn't so sure anymore.
That's why it's so important to look beyond the hype
Yeah.
and actually understand what's going on behind the scenes with the company.
Okay, so let's talk about a company everyone knows is a winner now. Amazon.
Okay.
They seem unstoppable, but I'm guessing their journey wasn't always smooth sailing.
Not at all.
Okay.
Amazon might be a giant now, but their stock has been on a roller coaster ride over the years. Remember the dot-com bubble bursting?
Yeah.
Amazon stock dropped by 99%.
Ouch. So even a company like Amazon,
Yeah.
which seems like a sure bet in hindsight,
Right.
had moments where it looked like everything could go up in smoke.
Exactly. And most investors don't have the nerves of steel to ride out those dips.
Right.
The emotional toll can make people panic and sell at the worst possible time.
So if picking individual stocks is such a gamble, even with well-known companies,
Yeah.
what's the alternative? You mentioned index funds,
Right.
but there's got to be more to the story than just buy an index fund and forget about it.
You're right. There's more nuance to it than that.
Okay.
Index funds are often presented as this safe and passive way to invest.
Right.
But
Yeah.
the truth is,
Yeah.
the growth of an index fund isn't spread evenly across all the companies it holds.
Mm-hmm.
It's often driven by a small handful of superstars.
Okay.
Think of it like a pie chart,
Right.
where a few slices make up most of the pie.
Okay. That's a helpful image.
Yeah.
So you're saying that even with an index fund, you're kind of betting on certain companies doing really well.
Exactly.
Okay.
For example, the Hang Seng Index in Hong Kong,
Mm-hmm.
over a 10-year period, one company, Tencent, accounted for over 40% of the entire index's growth.
Wow.
So even when you're diversifying with an index fund, you're still indirectly betting on a few big winners.
So in a way, you're not completely escaping the stock picking game.
Right.
It's just happening behind the scenes.
Exactly.
Yeah.
Yeah. And, even professional fund managers
Mm-hmm.
who spend their entire careers trying to pick winning stocks,
Right.
they often struggle to beat the market consistently.
Wow.
So in a way, index funds kind of acknowledge that.
Okay.
They say, look, we're not going to try to outsmart the market.
Right.
We'll just create a diverse mix of companies and let things play out.
Yeah, that makes sense.
Yeah.
It takes a lot of pressure off.
Exactly.
But it also makes you think, if just a small handful of companies are driving most of the market's growth, doesn't that raise some big questions about the economy as a whole?
Absolutely. If the majority of wealth creation is concentrated in a small number of companies,
Right.
what does that mean for everyone else?
Yeah.
What about innovation
Uh-huh.
and competition?
Mm-hmm.
Does it create a system where the rich keep getting richer?
Those are some serious questions.
Yeah.
We might need another deep dive to really unpack those.
Totally.
But for now, let's circle back to our listener and their original question.
Okay.
Should they buy individual stocks?
Right. So based on everything we've discussed,
Mm-hmm.
the research you sent suggests that for most people,
Yeah.
index funds are a smarter choice.
Okay.
Picking individual stocks is like trying to predict the future.
Right.
And as we've seen,
Yeah.
even the sure things
Uh-huh.
can turn out to be anything but.
So it's not that buying individual stocks is always wrong.
Right.
It's just that the odds aren't really in your favor.
Exactly.
And for most people, the potential downsides are just too big to ignore.
It's all about understanding your own comfort level with risk
Okay.
and what you're hoping to achieve with your investments.
And just to be clear, we're not giving financial advice here.
Of course not.
This is just about exploring the information and letting our listener make their own informed decisions.
Right. It's about giving you the tools to figure out what's right for you.
You know, one of the things that really surprised me in all of this was
Yeah.
how few companies actually end up being long-term winners, even
Mhm.
among those top companies in the market.
It's a good reminder that investing is more complex than just picking a company you like
Yeah.
and hoping for the best.
Right.
It requires research patience and a realistic understanding of the risks involved.
And the whole thing with those visionary companies
Uh-huh.
that ended up underperforming
Right.
was a real eye-opener, too.
Yeah, for sure.
It shows that even the most successful companies can stumble,
Absolutely.
and past success doesn't guarantee anything.
It's a valuable lesson in humility,
Yeah.
and it highlights the need to be flexible and adaptable in a constantly changing market.
Okay, before we wrap things up,
Okay.
I want to leave you with something to think about.
Right.
We've talked a lot about how a small group of companies drives most market returns.
Right.
What does that mean for how we view innovation, economic growth,
Yeah.
and the role of individual investors?
That's such a fascinating question,
Yeah,
and one that deserves deeper exploration.
for sure.
Does this concentration of wealth stifle competition?
Right.
Does it create a system where the rich get richer
Mm-hmm.
and the rest struggle to keep up?
And if a handful of companies have so much influence,
Yeah.
what does that mean for the average person trying to build wealth for their future?
There are no easy answers to these questions.
Right.
But by thinking critically about these issues
Right.
and engaging in thoughtful discussion,
Mm-hmm.
we can start to understand the forces shaping the market
Yeah.
and our economy in a more nuanced way.
This deep dive has given you a lot to consider.
It really has.
What are your thoughts?
Yeah.
What resonated with you?
Mhm.
What questions do you have?
Right.
We'd love to hear from you
Yeah.
and continue the conversation.
For sure.
I know, right? It's like you go into these things thinking you know something,
Yeah,
and then you come out and you're like, whoa, I have so much more to learn.
totally. It just shows you how much is out there.
And that's what I love about these deep dives.
Yeah.
They make you really question, like, what you thought you knew.
Absolutely. And look at things from a new angle.
Exactly.
It's not about having all the answers.
Right.
It's about asking the right questions
Yeah.
and being open to new perspectives.
And hopefully this has inspired you to kind of
Mm.
do a little more digging on your own.
Yeah.
And, come to your own conclusions,
Good eye.
because at the end of the day, knowledge is most powerful when you can actually use it.
Couldn't agree more.
So take what you've learned here, keep exploring, and never stop asking those tough questions.
That's a great way to put it.
Well, that wraps up our deep dive into the world of investing. We'll see you next time for another deep dive
Sounds good.
into whatever fascinating topic you send our way.